Well, folks, I hope you're ready for the market to absolutely make some unbelievable moves. We've got fundamental shifts going on in the economy right now that, in my opinion, are becoming very apparent. Like the end of 2020 into the beginning of 2021, when I was starting to see in the real world the seeds of a major inflation that I had never really seen in my adult lifetime starting to come to fruition. And then as we witnessed 2021 go along and we went into 2022, we went into an absolutely epic inflation cycle, the biggest inflation cycle we've obviously seen since the 1970s, right? And what I'm seeing now is the seeds are planted for not inflation, not stagflation, the thing everybody's talking about, but the seeds are now planted for deflation. I'm going to go into detail exactly what I'm seeing out there in the real world and how all this comes together, and ultimately how all this is going to affect stocks, valuation, where the market's headed, because it is a fundamental shift, I can tell you, between an inflationary environment and a deflationary environment, especially in regards to the economy and the way people want to value things, okay? Then after we get through all that, we're going to talk Palantir in this video. It's a very random two subjects to go on here today, but I got a lot to talk about in regards to Palantir stock, so we'll get to that, okay? This is an action-packed video. We got a lot to go through. All I need from you guys, 3 seconds, all it takes. Hit a like on this video and make sure you're subscribed. 730,000 plus subscribers now on the channel. You gotta be flipping my flapjacks, okay? So I can't go anywhere now and not see what is coming, okay? What is coming is deflation. You are not going to see it in the government numbers tomorrow or next week, but I promise you over the next 12 months you will see it, and it's going to hit, and it's going to hit hard. Almost as hard as an inflationary cycle hit. Not that hard, but pretty dang hard, okay? So I can't drive anywhere now without just seeing it everywhere, right? I am driving and I look to my right, PF Chang's right there, and what are they doing? Look at this. Price, price, price. Now, I understand not everybody's run businesses before, but if you want to if you're having trouble in your business, what happens is you start getting promotional. You start advertising price. Hey, we're a price. We got a special. We got a price, right? This is what happens in business when you get in a tough environment. If PF Chang's is doing great and their business is booming, they're not going to advertise price. They're going to just keep doing what they're doing, right? But when business starts getting tough, you start saying, crap, what do we do? What do we do? What do we do? How do we fix this, guys? And ultimately, what most businesses go back to is they go back to, let's lower price. Let's try to do some sort of incentive to get people in the door, right? I'm seeing more and more places out of business. So when you look at something like the Small Business Optimism Index, right, we're looking at numbers that are about the worst that honestly we've seen in modern times, really over the past year or two. Small business is hurting for certain, right? And when I go out there into the real world, I'm just seeing more and more places out of business, out of business. And the thing is that's so scary about this, the thing that is so scary is all these pictures I'm showing you are in actually a very upper class, if not wealthier area. This is not in poverty area or something like that, where you might see a lot of businesses that are out of business. So when you see, this is in Summerlin, okay? This is a very nice area with people with a lot of income. And when you're seeing this type of stuff in like nicer areas, you gotta say, oh man, like what's going on out there? There's some problems that are clearly brewing, right? 3 years of inflation is really started to take its toll now at this point in time, right? Savings, 50% off, right? 75% off. I mean, you might as well just give it for free. Yeah, you just, or is anybody selling off of, here's how good our candles are, here's how good our soaps are? No, it's about price. We got the special. We got the 75% off, right? Does a taco place care about how good our tacos is? Should we advertise that? No. We got the $4 pints, man. If you only pay $2 more, we'll give you even more of this beer. I mean, this is what we're up to now in this sort of market, right? Look at this. They're doing a sale on puppies. You know how bad it's got to be for them to do sales on puppies? Come on, man. You got to be flipping my flapjacks out here. Sales on puppies. What in the world's going on, right? No, I show you all that here at first, right? Because you're going to understand how this dynamic plays out, right? This place goes out of business, and then this place goes out of business, and then this place goes out of business, right? So how that ends up basically transpiring, the problems that start coming into the system is when you got more and more places go out of business, guess what has to happen? If anybody wants to go start a new business in those spots of all these places that have gone out of business, right? Guess what? they're going to want to pay very cheap prices, or they're going to go to some other plaza and say, okay, what if we open up here? How much will you guys charge? And so then these different shopping plazas have to compete. That's what? Deflationary, right? Because now what you were getting a year or two ago, right, from these tenants, you're not able to get moving forward, because now if somebody does want to go open up a business in one of these plazas, right, guess what? Now they're in the position of power. You, as somebody that's, the landlord of that, you could try to be strict and be like, no, we only want this price, we only want that price. Okay, next thing you know, your property is probably going to end up in bankruptcy, because a good probability you've got a loan on that, and your interest rates have gone up significantly over the last couple of years. So you're in a pickle. And so next thing you know, these guys, the small business owners, start to slowly become empowered, right? It's a slow process. It's like a process of like the small business owners kind of get wrecked. And then out of that wreckage, then slowly small businesses start to come back to life. And then they slowly start to get in a position of power, right? And remember, like who's in a lot of these different shopping plazas? It's a lot of smaller businesses relative, right? A lot of, mom and pop pizza places, or, the salons, or all these different types of places, right? Now, I went by this place, good Italian place in Summerlin, right? Al Solito Posto. And it was interesting, drove by about 6:30, didn't look very busy. I thought that was a little troubling on a Sunday. I'm like, that's not good, right? But the issue is, for these sorts of businesses, right, is there's all these other businesses going out of business, right? And look at this. I mean, it's everywhere. Look at this. Now leasing, another one, now leasing, right? Now leasing. All these places that aren't in business don't bring business to these other places, right? Like if these all had tenants, then it's a bunch more people in the shopping plaza, a bunch more people, coming in to do business at these other places, which then helps out the local Italian restaurant, right? Because there's just more foot traffic, there's more people around. Hey, let's go grab a bite to eat here. Oh, we can go to this store, and then we can go eat over here, right? But if all of a sudden all these other places start going vacant, then what ends up happening, right? Well, potentially you could go under as a business owner, right? And by the way, this is in a plaza with an RH in it. The big kind of, I would say, like anchor tenant in this particular plaza, and yet I look all around it, and it's just all like places that are all out of business. And once again, this is in a wealthy area. No bueno. When you see all these places just out of business, just vacant. It kind of makes me want to start a business in one of these places. I could go in there and just probably like negotiate the heck out of that. It's like, okay, $20, take it or leave it. Okay, not that extreme, right? But that's kind of the feeling. It's like, you want somebody in here, or you want an actual tenant, or you want to have a vacancy, right? And then once again, these places, a lot of them, they have loans. And so they could be potentially facing bankruptcy as a plaza, right? If you don't have tenants in there. This is all deflationary, right? This place, I'm pretty sure this was a bar or restaurant, out of business now at this point in time, right? Birdies are telling me that Echo and Rig might not even be in the best position. I don't know. I like Echo and Rig. Good place, man, but I don't know. From what I'm hearing, it's not the best situation, right? And so you're looking at a business landscape that is... The devastating effects of inflation are clear and apparent now. And I'm not just talking about in the data. I'm talking about you go into the real world and you see what's going on out there, and it's rough. It's looking more and more like places are out of business, or these places are just, it's price. Oh, we got the deal. We'll give you 70% off. We'll give you 50% off. And that sucks, man. That sucks. Now, great businesses, by the way, don't just have a lever of let's kind of like discounting. We'll get to this in just a moment, okay? But great businesses, truly great businesses, they understand branding. So, for instance, Ferrari. Would you ever see a Ferrari dealership and they're like, "Hey, $50,000 off all the Ferrari models today"? Like, of course not. That would be like super damaging to their brand. You ever walk in front of a Louis Vuitton store and see buy one, get one free? No, you ever go by a Rolex store and they're like, hey, $10,000 off all the models today, 25% off. No, of course not, right? You ever go by the Wynn and they're like, hey, our Wynn restaurants, it's buy one, get one free ribs tonight. Like, no, okay. That's low level business, right? Great businesses with great brands, they don't engage in that type of stuff, right? If you got a truly great brand as a business, you understand how to grow your business without just like lowering your price, right? And doing promotions and making it about the dollar amount. But for a lot of businesses, right, that's how they compete. And like when things get hard, they have to start cutting price, they have to start promoting. But also the tough thing for a lot of these businesses is wages, because we haven't gone through the unemployment cycle, which will likely come in deflation. We'll get into that in just a moment, right? But because we haven't had that big unemployment cycle, you're still paying your employees, a pretty good chunk of change, right? We've obviously seen minimum wage go up significantly in a ton of big cities and states around the country. And so you've got wage pressure still as a business, but then you're getting your customers not to be there as much. And so then you're having a lower price and do these promotions, which stick you in a bad position, right? And so it's ugly all around and it's vicious to go through. And so when you see the small business optimism index at these unbelievably low levels, understand it's not just like they feel like, hey, I feel bad, so I'm going to put bad on the survey. It's like the reality is it's not good for so many of them, right? For every one that's really doing good, I think there's probably 9 or 10 that are doing really bad in this environment. Now, a little bit of a blurry photo here, but the reason I took this photo is this is behind a car dealership. So a lot of car dealerships, at least out in Vegas, Phoenix, things like that, they'll buy up a lot of land, so then they stack a ton of inventory behind it. And I mean, this dealership was just loaded with inventory behind the main lot, right? The main lot, they want to try to put a lot of their best vehicles out there, the prettiest vehicles and those sorts of things, right? Or let's say you call in and you're like, hey, tomorrow I want to come look at that, Chevy Silverado. You guys got that red one there. They might bring that up from the back. Maybe it was in the back and they'll bring it out front. So then when you get there, it's like in the front, right? So all those little games they play. But I'm looking at these dealerships and the inventory's loaded. I mean, these pictures aren't the best that I was able to capture here, but I ask you, go around your town, go around your city, go to the car dealerships. I don't care where you live. They're going to be loaded with inventory. I don't care where you live. Go by the dealerships. They're loaded with inventory now at this point in time. Loaded with inventory, right? I mean, it's just like maxed on maxed when it comes to inventory of all these different folks, right? I mean, it's a lot different scenario than it was a year ago and especially 2 years ago when you could go by these places and they look like they were vacant. I mean, you want a Mustang? They got a Mustang in every single color and model you could possibly imagine out there. I mean, my gosh, like just Mustangs on Mustangs on Mustangs, right? And this is like this for all these places. They are loaded on inventory, right? And so, I mean, look at this. You want a Land Rover, you want a Range Rover, they got one of every single color and kind you want at that dealership, man. And it's just loaded. I mean, incredible, right? Now, the reason I show you all that there is what you're going to see in the auto market over the next 6 to 12 months is deflation. You will see deflation. At the end of the day, these dealerships, right, they had it really good for, a pretty good amount of time there. Things have changed. The buyer pool has dried up. Interest rates have gone up significantly. Customers, they can't afford a lot of these vehicles, and especially at the prices a lot of these, auto manufacturers are trying to sell for. And so these dealerships are going to have to slowly come into reality, and some of them are already doing it. I'm already seeing, $13,000 off this, $12,000 off this, $9,000 off this, $7,000 off this. But they're going to have to come to the realization that prices got to move down significantly. And, with a lot of these dealerships, they can get their own cars repoed off the lot. A lot of these folks, and you can talk to folks that are auto experts in the industry, right? When it comes to a lot of these different dealerships, Like, they have to sell these cars in a certain amount of time, or those cars could then get repoed from their lot, which is a funny thing to even think about, right? Because it's like, you ever think about a car getting repoed, you think about a customer, they couldn't pay their bill, their car gets repoed, right? It's weird to think about a dealership getting their cars repoed, but that can literally happen, right? And so these auto manufacturers these dealerships, they have to move inventory. And if your customers aren't out there, what do? What lever do you pull, right? You're already advertising all over the commercials. Well, then what do you start doing? You advertise deals, $5,000 off this, $7,000 off MSRP on this, right? $7,500 on this, right? And you start getting very promotional. Now, Tesla was a leader in getting promotional, and everybody thought it was only a Tesla problem because they never understood the most simple thing to ever understand, that Tesla sells direct to consumer. The other auto manufacturers sell the dealership model. So there's a huge lag time there. The auto manufacturers are worried about, trying to get their dealerships back full. If we go back to 2022, these dealerships were empty on inventory. Empty. I mean, I've never seen anything like it in my life. My adult life, I've never seen dealerships that empty as they were back in 2022, right? And even 2021. Incredible. Stimulus money pumped out there, plus you had supply chain problems, and so there's been a big game of catch-up in 2023 and the first half of 2024 of like getting the dealerships back full. Now they're all full. So now what do you do as an auto manufacturer? You got these lots are full, the fronts of them and the backs of them are loaded with inventory, and meanwhile, what do? You keep producing vehicles and then you overload them even more. Like, they're not going to have anywhere to put these dang cars anymore at this point in time, right? So what do? Then you have to start discounting, which is, once again, what is it? It ends up being deflationary. And you hope that the customers are out there when you say, hey, we're giving $10,000 off this, $65,000 truck. You hope there's somebody out there that says, okay, that's a good enough deal that I'll buy, right? Or maybe they're saying, no, that's still not good enough. I need $15,000 off that $65,000 truck. And then, you might have to make that deal, because if there's no other buyer there, what do? You're going to sit on it again for another 2 weeks, 2 months, 2 years? Like, you don't know. Like, or are you going to say, you know what, okay, we'll sell it to you for that price. And so this is, a major occurrence now that's going on at this point in time. The only thing that I'm not seeing that's deflationary is the amount of stickers on this vehicle in front of me. I was like, holy smokes, that's inflationary, okay? So before we get into Palantir, how does this affect stocks? How does this affect the market? And those sorts of things, right? So it's not good. It's not good. And let me explain why it's not good, okay? Now, as with all things in the economy, there's always good and bad that comes with everything, but overall, it's not good. Because once we get into a cycle where things are getting more and more deflationary, right? At the end of the day, would you say a strong economy is deflationary or inflationary? Anybody would say a strong economy, you're likely going to have inflation in the economy, because strong economies, right, they then produce more and more jobs, which means more and more demand for workers, which means more and higher wages, right, which is at the end of the day inflationary. And if you've got a strong economy, it is seen that you should be able to raise price, right, and get even more for those tacos you sell, right, or your beer you sell, or your sandals you sell, or those candles and those soaps. You should be able to get even more money, right? And so that's great. But when you go deflationary, right, then people say, this is not a strong economy, the economy is getting worse. And if people have that view, they're willing to pay a lot less for assets. Assets a la, anything from stocks, real estate, even crypto, anything. Like, that's the way people start to view it. So we're not there yet, because when I say the seeds are already planted for deflation, it doesn't mean everything's blooming right now. The cucumbers haven't come out yet. The tomatoes haven't fully grown yet. The seeds are in the ground now. And so now the plants will come out over this next 6 to 12 months, and that will be the realization to a lot of folks in the market that are going to wake up and be like, oh my gosh, like, wait, prices are going down? That's not good for the economy. Oh my gosh, like, this is not a good, healthy thing. And so then more and more people kind of freak out, they flip out, they try to realize, what do we do? But then you have interest rates, right? So interest rates could be seen when they're going down. A lot of people assume that's going to be great. Like, oh, interest rates going down. And It could be from the perspective of if interest rates go down a bunch, right, you're not going to get as much from treasuries, which means you might be more likely to then go buy stocks, right? Because you're like, I can't get my 5%, 5.3%, 5.5% in a treasury, so let me go put that money into the market, right? Which I could understand. That could be seen as a good thing. But on the flip side, you could go back to the great financial crisis and they would drop rates and drop rates and drop rates and rates and rates and rates all the way down to zero, right? And what happened to the market? It still got wrecked. It still got wrecked in that situation, right? So just because interest rates are going down does not mean necessarily great things. And the other problem we have is interest rates are basically guaranteed to be elevated for at least 6 to 12 months. Because let's assume they cut 1 or 2 times this year. Okay, it's not going to move interest rates that much. What are we going to cut from 5.5 down to 5? That's still a very high interest rate compared to any time in really the past 15, 20 years. So that means interest rates are going to continue to weigh on this economy over this next, let's say, 12 months, which means the higher probability is the seeds of deflation that I'm showing you today is going to get a lot worse over the next 6 to 12 months. The amount of businesses that unfortunately go out of business in the next 6 to 12 months is going to go up significantly, right? Then that leads us to housing. Housing's been a big problem for inflation. And so housing is the ultimate, in my opinion, lagging indicator. It's the ultimate, right? Because housing is the most basic need of humans, right? Outside of food and water. And so shelter, right? So it takes a while for that to really get hit. People got to lose the cars and the homes and those sorts, lose the cars and the businesses and all those sorts of things and the jobs before you can get to the housing part, right? I'm not seeing any seeds of deflation in housing yet. I'm not seeing prices really get lowered the way they're going to get lowered, likely. I'm not seeing apartment communities really doing the sort of promotions yet that, like, I drove by a ton of apartment communities all over the valley today. Did I see a ton of promotions out there about, first month free, last month free, get 2 months free on a 12-month lease? No, I didn't see those sorts of banners and promotions. When you see those, we're at the bottom. We're at the bottom of the deflationary cycle. When you see that, that's when you'll know, we really went to the bottom of the deflationary cycle. Not seeing it yet. That will come, but it's not here yet. Okay, that will come, but it's not here yet. Right now, we're starting to see all these businesses, deflate their prices and deflate their prices. I showed you guys earlier in the week, Walgreens, Target, Walmart, Amazon, all these companies lower in price on thousands of items. I told you, when these massive companies are doing things like that, it's not a good sign. It's not a good sign. No, they're not there to do you any favors. Walgreens isn't there to do you any favors. Neither is CVS. Neither is Target. Neither is Walmart. If those guys are going down on price, it's because they're getting desperate. And they feel like they have nothing else to do but go down in price. They're like, crap, man. Customers aren't there. We got to start getting promotional. But the problem is, all these guys get more promotional against each other, and there's only a certain amount of crabs out there to go, right? And to spend. And so let's say you got 3 restaurants and, it's a weaker business environment, so they're all doing promotions, but there's a limited amount of customers out there. Shoot, everybody's just kind of slicing everybody's throat in the end, and no one's actually winning. It's just about survival at that point in time. It's just about who can survive longer. And that's where what comes into handy. Balance sheet, right? You got a strong balance sheet. You got a strong capital structure. Steve Wynn taught about this a long time ago. Watched some great videos on Steve Wynn back in the day talking about capital structure, balance sheet, how incredibly important it is, because when you're going through these sorts of times, that's what's the differentiator. If that taco place wants to make it, right, selling their $4 pints of beer or whatever, they better have the balance sheet to get through, because there's a decent probability they might not be making money. I've already seen it. We've got several restaurant chains here in Vegas that have already gone under now at this point in time. They simply couldn't make it. They didn't have enough cash around to get through this tougher time, right? And so they've already gone under. And you're seeing a lot of these other ones trying to get promotional, trying to make it through. If they don't have the money socked away, they won't be able to get through the tough time. and they'll go under in that situation. Because as a business, you've got to plan for certain time periods where you're not going to be profitable, where you're going to actually lose money, right? You as an investor in the market, you've got to understand sometimes companies lose money. Sometimes your companies are going to lose money. The companies with a great balance sheet can make it to another day to see another day. The ones that don't have a good enough balance sheet, don't have good enough capital structure, they won't make it to the other side, right? I showed you RH in this video earlier, right? RH is a perfect example of a company in which their CEO made a very poor, bad decision. They decided to do a massive share buyback last year, right? Spend a fortune of the cash off the balance sheet. And now, if the business environment remains weak for the next 2 or 3 years, the company isn't going to be in a good place, because now the company in recent quarters actually started losing money. So now they're losing money, their balance sheet's weakened. What do? Oh boy. Well, do you start getting promotional there? Well, then you ruin your brand, right? You're supposed to be a luxury brand. If all of a sudden you start doing, big signs that say 40% off, you just ruined your brand. You can't do that when you're supposed to be a luxury brand, right? So he stuck the company, in my opinion, in a bad place for this next couple of years. Unless the housing environment gets a lot better and a lot quicker, it's not good. It's not good. So, that's a perfect example. So at the end of the day, if you're going into a deflationary cycle, people will be willing to pay less for assets. On the flip side, when you go through a deflationary cycle, right, and you come out to the other side, you could set yourself up for years of fun. And the reason being is you're dealing with lower prices, and wages sometimes in these deflationary cycles, they don't really get hit nearly as negative as prices going down do. And so you could actually set up for a nice 5-year run, 7-year run, 8-year run for the economy once you go through that cycle. So it's pain, it sucks to go through it, but when you come out to the other side, it's a lot of fun for a long time. We watched that play out in the Great Financial Crisis. Great Financial Crisis was a lot of pain. Real estate prices got destroyed, stocks got destroyed. A lot of small businesses got destroyed. But the ones that made it through to the other side, they set themselves up for years of fun, right? And so that can happen, but you got to make it to the other side. And so that's important for us to all understand in regards to these companies is you better be in the best of the best. I'm telling you, especially for this next, 12 months, because the market is not very prepared for us to go into a deflation cycle, because everybody's thinking inflation. And I'm like, inflation's a thing of the past now. It's going to show up in the numbers still for the next several months, but boots on the ground. Look at what's going on out there. All these companies getting desperate. McDonald's like, we got to do a $5 meal deal. Telling you, man. Starbucks emailing like crazy, buy one, get one free drinks. These companies aren't there to do you any favors. I'm telling you, when all these big dogs, the strongest of the strong, are like trying to get promotional price, deflation. It's coming, baby. It is coming. And so just keep that in mind. But it's going to be a whole cycle to work through. Just like inflation didn't show up overnight and it was a problem, it got on everybody's radar when the Fed started caring about it at the very end of 2021. But inflation was a problem before the end of 2021. It was a problem in the real world all the way back at the beginning of 2021. The end of 2020, I talked to several different small business owners. They were talking to me about inflation before we even in 2021. And before everybody recognized it in 2022, they were already saying about this product went up, oh my gosh, this is happening. So just, wait on it. And all of a sudden you'll see 6 months out, 12 months out, oh man, like all this stuff I'm showing you is going on in the real world. It's all gonna come. And then everybody's gonna be talking about deflation. That's gonna be interesting. Very interesting when we get to that subject, because no one's prepared for that. I'm telling you, people are still talking about inflation. They're still talking about stagflation. Inflation, stagflation. I'm like, they don't understand how quick it can go from inflation to deflation. Look back to prior to the Great Financial Crisis. Look how fast we went from major inflation to deflation. It happened like that. Less than 12 months. and you went from very high inflation to suddenly deflation. Fast. It happens very, very quickly, okay? So, very important to understand that, okay? Palantir. Oh, baby, okay? Oh, baby. When I say there's certain companies that are going to do well regardless of what's going on out there, deflation, inflation, small business optimism index, consumer confidence, blah, blah, blah. Palantir is one of those sorts of companies that is set up to do well regardless, okay? So Bay Ray had posted this. I thought this was interesting to cover here. There's a lot of different things I want to cover in regards to Palantir. Palantir is drowning in cash. That's a good way to put it, Bay Ray. How do you think Palantir should utilize their cash moving forward? Palantir has a record cash and cash equivalents equaling $3.9 billion, most of which is in bonds, gaining around 5%, practically no debt. Palantir did a measly $9 million share buyback in Q1. Maybe they're going to ramp this up. It doesn't really make sense to do just $9 million. It doesn't make a dent in $2 billion of shares. So first off, yes, I agree with that. Like $9 million share buyback is a joke when you got that many shares outstanding, like 100%. Now, what about ramping up the buyback? So my opinion is no. I don't think they should do that right now. I think for this year, they should still just focus on, they're bringing in ridiculous sums of money in terms of, all the cash they're generating from treasuries getting 5+%. I say, because I don't think you're going to be able to get these sorts of rates a year from now or 2 years from now. I just don't. And so I think this is a moment we're going through. Take advantage of it as much as possible. Take advantage of it, right? Because we do know if the market goes through some sort of correction crash, if all of a sudden people freak out about this, what I'm talking about in terms of deflation, and all of a sudden we go from an inflationary mindset of everything going up to prices coming down, including stocks. Palantir stock could get hit hard in that situation. You got even more ammo there to go ahead and buy back even more shares. So I like the approach right now of really focusing on treasuries, making the easy money. They can make so much easy money right now for this year. And then 2025, we can look at things, right? We can see where the stock's trading at. I mean, let's say the stock has flatlined. Let's say it's still 20, $22, $25, whatever. At this time next year, and let's say you can no longer get, 5% plus in treasuries. Let's say at that time, maybe only 3% or 2.5%. Well, at that point in time, maybe it's time to do a big share buyback, right? But don't do it Gary Friedman. Don't blow all your money before you're sure you're in the clear, okay? It's like, I'm sure RH, at the end of the day, RH would be a lot better off if they had that billions of dollars in treasuries right now, earning them ridiculous sums of money, could sleep well at night, don't have to make any negative adjustments to the business, and would be in a great position. And Palantir's in that position. So, I would rather be that situation than something else, right? Like we'll get to the share buyback. There's plenty of time for the share buyback. The share buyback can be done to be honest, the share buyback can be done anytime, right? I can tell you when it comes to earning 5% plus, I don't think that's going to necessarily be forever, right? Especially if we're talking about going into a deflationary cycle over the next year. No, okay? And as soon as unemployment starts to tick up in any major way, the Fed's going to start cutting like crazy. They're going to panic. That's what happens, right? And that will be that, right? Now, Bay Ray says, the options I see to deploy cash as it builds up is 1, treasuries, 2, keeping it in cash, 3, share buybacks, 4, dividends, 5, finding new growth levers for existing products, R&D for new products, right? So once again, my opinion is treasuries is the best thing to do. Keep it in cash, I don't think makes sense right now. Like, keep as much in treasuries as you possibly can, because let's get that 5% plus. Otherwise you're still in inflation, even though the seeds for deflation have now been, planted, but you're still in inflation right now. And so you don't really want to keep cash around. You want that money to be earning you money in treasuries, right? Share buybacks, that's going to have its time. 2025 and past, let's do share buybacks. But for right now, let's keep treasuries. Dividends, no, I don't think Palantir should pay dividends this entire decade. I'm not talking about this entire year. I'm talking about this entire decade. Don't worry about that, right? Find new growth levers for existing products. I think they already do that. R&D for new products. Yeah, I think Palantir could maybe spend a little bit more on R&D. They're spending more on R&D. They've upped their R&D budget quite significantly on a year-over-year basis. So, I think that's Yeah, I think that's kind of my focus. Focus on continue to come out with products. If they see an acquisition that looks interesting, they can buy something. But I don't like necessarily buying right now. Maybe let valuations come in line a little bit more, and then maybe we can talk about making a deal out there, right? Now, somebody said if somebody gave you $100,000 and said to put it in either Palantir or Nvidia, which one would you put it in? If I was insanely short term, like as in like the next few weeks or next month, maybe Nvidia is a better play. But I think for the long term, Palantir is the better play. I think there's much more upside for Palantir long term than actually there is in Nvidia. And I'm obviously bullish on both companies. I own both stocks in my public account, right? But I like Palantir a lot better. You know, these sorts of software businesses and what they've got there for a product. And it's not. I mean, it's tough. It's a tough pick. It's like, you know, both are so great. It's like picking who's your better athlete, and it's like two insanely great athletes, right? And it's like, okay, Ronaldo or Messi, and it's like, well, shoot, they're both so good. I mean, I guess I'll pick Messi if I had to pick one, but they're both so good, right? That's how I feel in regards to this situation. If I got to pick one, I would go with Palantir overall. Now, Amit, posted about this, right? The $480 million Maven system contract, which we had talked about last week, right? The contract runs through 2029, so Palantir will be getting $96 million a year from this deal, which is, a very significant deal. He says, okay, but a lot happened after hours today. The $480 million contract Palantir got yesterday isn't split evenly over 5 years. Instead, $96 million this year, instead of the $96 million this year, we'll be getting $153 million. The Army is so confident in Palantir, they want to give them 31% of the entire contract in year one. Analysts will have to start baking into their numbers revised growth estimates from this deal, and if Palantir can raise guidance from 21% to 22-23% year-over-year growth, the street is going to like seeing top-line growth acceleration, 100%. I think that's what you're going to see over the next several quarters is a top-line acceleration. It's going to be beautiful. They will also like seeing government revenue continue to increase. Yes, because government revenue has been the one kind of weak spot. You haven't been able to say anything bad about the commercial business. The commercial business is phenomenal. The only thing you could say bad about Palantir is the government business, right? It's been very weak. It increased from 11% 2 quarters ago to 16% last quarter. On top of that, we got another $33 million deal today. In the past 3 months, Palantir received $700 million across 3 deals with the Department of Defense. And, in regards to these deals, they just keep coming through one after another. And these deals are significant. $700 million in deals. Remember, Palantir is only a company that does a couple $1 billion a year in revenue. So we're not talking about this is small numbers. Like, this is massive for Palantir in their future business model. So, and remember, the government side is the side I'm least excited about. I'm really excited about the commercial side. The commercial side is really where it is at in terms of the growth rates. So if we could talk about this government business really starting to come through on top of the commercial business, I mean, my gosh, it's lights out. So, that's just one of those best-of-breed business models that you wouldn't know things are tough out there. You wouldn't know all those places are out of business I showed you at the beginning of this video. You wouldn't know, how bad it is for small business, because Palantir, there's just, they're a whole different level of a company. And those, when you can find those sorts of companies in a not a strong economy, you're onto something. You're really onto something, folks, okay? And so, that's that, okay? Appreciate y'all joining me here today. If you're looking to take your investing game up to another level, you need help understanding financial statements. You need help understanding if you're getting a great deal on a stock, if you're getting ripped off on a stock, all those sorts of subjects. I can teach you all that in my private group through the course curriculums. And I also do exclusive videos in my private group each week. You also get to see the moves I'm making my $2 million Fidelity account as well each week. And, kind of learn from me in terms of how I invest. And you also get to see the Patreon position moves. So you get to see how I invest small amounts of money in really large amounts of money. So very, very valuable. You get access to our Discord chat as well. If you'd like to apply to join there, click the pinned comment, fill out an application. We'll see if we can get you in there maybe either this week or next week. Okay. Much love and have a great day.